Hi guys, my name's Peter, and this is Helping People with Bitcoin. Today we're introducing a new series called Bitcoin versus Banks. Before now, complaining about your bank didn't really get you anywhere. You could switch banks, but then what? It's still a bank. Bitcoin changes that. In fact, one of the best ways to teach Bitcoin is to talk about how much better of a bank Bitcoin is than your current bank. To do that, we first need to talk about the pros and cons of traditional banking. Bitcoin versus Banks, Part 1, Banking, Pros and Cons. As always, if you like the video, be sure to click the like and subscribe buttons below. And if you want to be notified the next time I post a video, click the bell and then select all. And also let me know what you think of the videos. If you like them, let me know what you think in the comments below. And then also if I missed something or if you want me to talk about or cover something else, let me know that as well. Okay, so banks do have benefits. I use banks every day for my family and for my business. Most people do. However, not everyone does or can. In fact, you may not know this, but 1.7 billion people out of the 5.6 billion adults in the world, or a third, are considered unbanked, which means they do not have a bank account. Imagine that, not having a bank account. We'll talk about that more in a future video, but for now, be grateful that you have one because life is more difficult without one. Anyway, here are the 10 bank benefits. Number 1, direct deposits and automatic payments. You start a new job and you set this up the first day on the job or the second day. It goes right to your bank account. Tax refunds work the same way too, which is easy. Automatic payments for bills like credit cards, mortgages, student loans, online shopping, it's convenient. Number 2, banks are safe, they're secure. The probability of someone robbing the bank and you losing your money is low thanks to high levels of physical and online security. Plus, if it does happen, fraud prevention is in place and bank robbers usually get caught. Online vendor issue, file a dispute, and they'll usually rule in your favor, which is comforting. Number 3, customer service. It's reassuring to talk with your bank in person or on the phone if you need help. Number 4, payment flexibility. Banks integrate with other networks. You have the bank's network, so you can see your balance online or on your phone. Debit cards also have Visa, MasterCard logos on them, which means you can use them anywhere Visa or MasterCard are accepted globally or online. Plus, debit cards let you take cash out of ATMs. There's ACH functionality, which is how you get your paycheck and tax refunds so fast, faster than you used to. And then lastly, wire transfers, which is anything over $25,000, and it's what we use to pay off our house. Number 5, insurance. The Federal Deposit Insurance Corporation, or FDIC, insures banking deposits up to $250,000 per account in the event of a bank failure. Number 6, interest. After a year, banks pay you 1 to 3% your average daily balance at one time. So if your average daily balance was $1,000, 2% would get you $20 at the end of the year. It's like a stock dividend. Number 7, multiple accounts. New customers usually get 2 different accounts, a checking and a savings account. Number 8, online budgeting tools. Most banks have slick budgeting interfaces where you can do things that only sites like mint.com used to let you do. Number 9, other tools. Checks, checkbooks, and mobile deposit. There's money orders, cashier's checks, and all have their individual places and uses. And finally, number 10, other products like bank loans or lines of credit. So there are 10 traditional banking benefits. So what are the cons or the downsides? Number 1, direct deposits and automatic payments. The main downside with automatic payments is that sometimes vendors accidentally overcharge or double charge you. This stung us a couple years ago when my wife's doctoral student loan bill was charged twice in the same month when it was only supposed to charge us once. And it took them a couple months to fix this. If you're not already checking every charge on your bank statement, you really should. A second downside is overdraft charges. Pre-2008 and the Great Recession, there used to be some leniency with this, but nowadays, not as much. Number 2, security. Banks spend billions of dollars a year to prevent and reconcile fraud. Industry-wide, it's a $23 billion a year business. By 2025, they estimate it'll be a $56 billion a year business. So what? What does it have to do with me? Who do you think pays for that? You do. Account fees, extra charges, banks risk your investments to make sure they stay competitive and stay in business. And then there's increased state and federal taxes. And what if you're on vacation and there's suspicion of fraud? They freeze your account. And not to freak you out, but a close friend of mine worked at a local Pittsburgh bank here, and they were held up at gunpoint, robbed on 2 different occasions. So bank robberies still happen. Downside number 3, customer service isn't always good. There's long wait times, disconnections, and then there's the language barrier, which can be infuriating. Some banks have strange hours, and they seem to have different holidays than the rest of us. Number 4, bank networks might be flexible, but they're not entirely reliable. They can be slow, have bugs, get hacked, and go down. Wires aren't cheap. They're about $25, and they take time. And not all networks are accepted around the globe. Downside number 5. So the U.S. government insures your deposits up to $250,000. Greece and Cyprus thought they had a similar arrangement with their government. And guess what? Their accounts were either frozen or seized because of the 2008 banking crisis. There is zero guarantee that that won't happen to us as well, or in other first world countries. Additionally, what happens if a country continues to inflate its currency, like in the case of Venezuela or Zimbabwe? Now you're in big trouble because your money's virtually worthless and you can't touch it because there's limits on how much you can take out from your bank a day. In the case of Greece, they had a €60 daily withdrawal limit. And then also in 2016, India announced it was discontinuing the 500 and 1,000 rupee bills. Their 2 largest, in an effort to reduce crime and eliminate counterfeit cash from circulation. Normal folks who weren't criminals or using counterfeit cash had 50 days to exchange the currency, and then it was gone forever. The lines were massive, and people even died in a rush to get to their banks. Downside number 6, interest. This is a joke. You used to be able to get a couple percent years ago. Nowadays, you're lucky to get 0.5%. That's half of 1%. In Europe, they already have negative interest rates, and that might also happen here as well. To be clear, that means you deposit your money, and instead of getting paid interest on your deposits, you pay them interest to hold your money. Get it? Next, and this is bad, the Federal Reserve used to require banks to keep 3 to 10% of all deposits as reserves on hand so that people can withdraw their money without fear of it not being there. But guess what? That changed in 2020 because you know what it is now? 0%. Yes, banks are not required to hold any reserves on hand. So is your money there? Probably with the rate that we're printing money. And additionally, probably because the US dollar is still considered the world reserve currency, which is the favorable reserve and considered the safe haven. But if a lot of people want to withdraw their money at the same time, it's bad, and it's called a bank run. And while they're uncommon, they have happened before. They happened during the Great Depression in the 1930s, and they also happened again during the Great Recession in 2008. Number 7, there aren't many downsides to opening multiple accounts. It does cost you a little money, plus you have to keep a minimum amount in your account. The main disadvantages in third world countries where over 1 billion people can't open a bank account or don't. So this isn't a given, and we'll talk about that in another video. Number 8, the budgeting interface looks good and works well, but frankly, I never use it, and I would gather you don't either. Number 9, checks are ancient technology, and there really should be no reason why we still use them today. For starters, they cost money, they can be lost, they can be destroyed, they could be stolen, they could be forged. And especially because our signatures change so much throughout our life, and that's what we use to endorse or prove that it's us who's actually signing that check. And the other financial instruments like money orders or cashier's checks have the same downsides. And lastly, downside number 10, the other products banks have are all debt-based. They're hardly creative or innovative, and who wants to be in more debt? So today I introduced a new series entitled Bitcoin versus Banks, and we started with part 1, banking pros and cons. Be sure to check out part 2, which is going to be Bitcoin as a bank, pros and cons. And if you like the video, click the like button and subscribe to my channel below. If you want to be notified as soon as I post a video, click the bell and select all. And let me know what you think of the video. If you want to add some comments in the comment section below, if there's something I missed or if there's something you want me to cover in the future, I'd love to know that as well. But thanks for your time, everybody. Have a great day.